Hello and welcome to this edition of Money in Motion video blog. This is Dan Perkins. Thanks for watching and happy Thanksgiving to you. I thought it was appropriate to do it this time of year because it was just about a year ago that Saudi Arabia and the OPEC nations decided to not cut production of crude oil, and as a result we saw a $5 decline in the price of crude oil over Thanksgiving weekend. The Saudis announced over that weekend that they were not going to cut production because they were trying to drive the American frackers out of the oil business, and they needed to do it to protect their market share. My guess is that when they made the decision in Vienna, they didn't think it would take very long for the frackers to capitulate, and they could then start to cut back on production, which would drive prices higher. Well, it didn't work out that way. In fact, many of the OPEC nations are on the verge of bankruptcy, including Saudi Arabia. The price of oil versus the operating budgets of the countries has declined so dramatically that they're in serious financial problem. For example, Venezuela recently had spent all of its cash and now was selling gold in the open market to raise cash to be able to try and take care of their people. Saudi Arabia took back $80 billion in investment dollars from the managers all over the world. They sold $27 billion worth of bonds, and they've added 1 million barrels a day of crude oil to try and finance the deficit. But they find themselves still about $35 billion short. Vladimir Putin, on the other hand, finds himself $50 billion short because he built a budget to run his government based on $96 a barrel for crude oil. Now, on the 2nd to the 5th of December, just a little over a week from now, the OPEC oil ministers are meeting again in Vienna to try and decide what to do. And I think they're between a rock and a hard place. If they think that if they cut back production, they can increase the price of oil, then that would create an opportunity for the American frackers to open up their wells and begin to compete. On the other hand, if they keep prices low by keeping production levels at the current level or higher, what you're going to find is we could see another decline in the price of crude oil. West Texas probably below 40, and put a lot of both American frackers in difficulty, but a lot of OPEC nations in difficulty. Now there is a silk purse out of this sow's ear, and that is that for the last 40 years, OPEC has controlled the world economy by maneuvering and manipulating the price of crude oil. They no longer have the ability to do that, and they're on the verge of bankruptcy, which would lose their power. More important than that is that because they are generating less and less revenue, they find themselves in a position to choosing between their people or funding terrorists. You see, the bulk of the funding for terrorist organization came from the OPEC nations, from the excess profits that they generated in the sale of crude oil. Those excess profits are not there. And so the question is going to become, can they support terrorist organizations at the same time providing enough money to take care of their economies? I think they're going to have to choose, and I think they're going to choose to keep their own jobs and do everything they can to support their economy. So watch the news headlines. If you see that the Saudi Arabia and the rest of the OPEC nations decide to leave the production levels at the level they are, look for a fall in the oil markets, and also look for some kind of a fall, although I think the oil markets, U.S. oil markets, have already anticipated that to happen. So I don't see a lot of downside from this level, but perhaps some of the other international oils might be more vulnerable. If, on the other hand, the Saudis decide to cut production, along with OPEC, then you could see a huge rally in the oil market, and oil stocks will probably outperform dramatically. So it's a big switch, one or the other. Now, I want to talk about what's been happening in the markets over the last 30 to 45 days. We've seen the decline in the 300-point up and 300-point down. Now we're in a much smaller trading range in the 30 to 50 points up or 30 to 100 points down, trading in a relatively narrow range. This, as you can see in this chart, would be an indication of a compaction, what is called a compaction, which could lead to a breakout or a breakdown. I think that oil could be the catalyst to cause a breakup, but oil could also be the catalyst to cause a breakdown. It's a very difficult time in the markets. Nobody knows for sure. Nobody knows where it's going. And even the best pundits are now saying that the Fed might raise in December, but maybe it's one and done. I find that hard to believe that the Fed, one, is going to raise rates, and two, that they would raise it once and say they're done, because I'm not sure what message that sends to the world markets. The dollar's been strong. We are now approaching 106 on the euro. And we'll show you a chart here in a minute about how the dollar's done. That's one of our key indicators. Interest rates, the yield on the 10-year Treasury is about 2.25. That's up a tad. And of course, the last part of our triple play, that is gold. It's gone nowhere. In fact, it's approaching its lows for the year. With Venezuela selling gold in order to raise cash and other governments being strapped for cash, you could see more pressure on the gold market. I think it's possible between now and springtime, if not sooner, we could see gold prices below $1,000 an ounce. I'm not looking for a lot to happen between now and the end of the year. The operative factor will be the impact of oil prices. And so we'll find out whether we'll get a Santa Claus rally or coal in our stocking probably around the 5th of December. We're still getting our dividends and making good income. We've had a significant recovery in the portfolio. And I'm optimistic that we'll continue to do well and make up a lot more of the declines that we had with that terrible third quarter we had this year. So that's it for now. If you have questions, please feel free to give me a call. Enjoy your turkey and have a great Thanksgiving, and we'll talk to you soon.